Time is a luxury you cannot afford to purchase. As a part-time trader, you have to learn how to utilize every bit of it to your advantage. This means planning, prioritizing, and making informed decisions to maximize your effectiveness and productivity in forex trading. This video seeks to provide insights into how I actually trade forex as a part-time trader using ICT concepts. Now, as a part-time trader, what I do is I analyze my charts during the weekends when I'm off duty before the new trading week begins. And at the end of each trading day, I also take some few minutes to look into how the market behaved that day before I go to bed. Now, this helps me to anticipate what the next day will be. Now, the strategy that I'm going to discuss today is not entirely new since it is a subset of my entire trading strategy, which I have already dissected in this channel. Now, the key components of this strategy is the weekly internal range liquidity or order block to external range liquidity and how I use the weekly profile. Now, I will not be discussing this today since I've already done that in my entire trading strategy. Now, we also look into the New York session and some of its characteristics that aid this particular strategy. Now, we consider the 4-hour market maker model, the 4-hour 10 a.m. or 2 p.m. GMT expansion candles, open high, low close, or open low, high close. We will talk about our lower time frame entry and everything that we are doing here. Our target is a 2 risk to reward ratio. Now, let's look at the New York section. Now, this session begins from 1 p.m. to 10 p.m. GMT. Now, within this period, there is a very active zone, that is the kill zone, and it is formed by the overlapping of the London session and then the New York session. So the New York session kill zone will be between 1 p.m. to 5 p.m. GMT. Now the New York session normally comes with a continuation or a reversal of the elder market cycle. Now when we consider the New York session continuations, it comes in two forms. That is when the lending session becomes the high of the day. And so, as you can see here, you realize that the Asia session came with a consolidation, and then the lending section manipulated the Asian session highs towards a higher time frame key level and then reversed. So the lending provided the reversal of the day, and when this happens, you realize that after expansion, there is a retracement. So the learning session expands, and then the New York session retraces into a key level within the lending session, and then continues the expansion lower to a higher time frame key level. So when you consider the daily profile, this is a classical sell day. Now, the opposite or the reverse will happen when we are in bullish market conditions. Now, the other continuation comes in when the Asia session becomes the high of the day. Now, with this one, you realize that the Asia session expands lower. The lending session comes in with a consolidation. Now, after consolidation, here we can clearly see an EMD setup occurring here, where the New York session manipulates the lending session highs and then expand to make the low of the day or expands to our higher time frame key level. Now, We also consider the New York session reversal. Now, the New York session reversal is when the New York session becomes the high or low of the day. That is depending on the market condition or the bias of the day. Now, you can see clearly that during these examples, you realize that the Asia, then the lending sessions comes with a consolidation. Now, this mostly occurs where there is going to be a high impact news during the New York 30 opening price. Mostly, there are a lot of high impact news that occur at those times. So you realize that both sessions, that is the Asia and the lending session, comes highly with a consolidation. And then during the news release, the New York session seeks to manipulate the highs of the Asia and then the lending sections before the real move of the day occurs towards our high time frame key level. Now, we also look at the 4-hour market maker model. Now, as ICT once said, this is one of the ways he uses to look at the market and then find his entries. Now, this is one thing that has helped me a lot in my trading journey, and I always move along with it. Whatever strategy I build, this market maker model is always part of it. Now, as you can see from our weekly internal range liquidity or order block, now I'm considering the buy side of the curve. Now, the opposite or the reverse will happen in the sell side of the curve. But for time's sake, I'll just deal with the buy side for now. So as price is coming from our weekly internal range liquidity or order block, we realize that there is an SMT with the correlated assets. Now I might say this that I don't trade many assets. What I consider mostly is the EU, GU, gold, silver, and then the SPS 500. Yes, that is the most assets that I trade in the forex market. Yes, and it has been helping me a lot. So mostly all my setups, all my education is centered around these pairs and how they move. So from our weekly internal range liquidity or order block, uh, there is a market strata shift on the 4-hour chart. Now, this will confirm to me whether we are reversing off the weekly internal range liquidity or order block. So, this is our smart money reversal. Our market structure shift comes in here, and then there is a pullback to retest the key level within discount of premium areas. Now, after that, price will expand higher. Now, this becomes our low risk buy when it expands and then retraces into another discount zone. That will be our first stage, and that goes on to the second stage, and then finally to our weekly draw on liquidity. Now, these are the areas where we will drop down to the lower time frame, ideally the 15-minute chart, to look for our entries during the New York section. So, without wasting much time, we will move on to our lower time frame entry. Now, here what we will normally consider is the 15 minutes, 5 minutes, or the 3 minute chart. Now, this is because ideally I will be using the 15 minutes, but there are times that the 15-minute chart is not very clear to identify the various market maker stages to enter. So with that one, you can drop down to the 5 minutes or the 3 minute chart where the setup may be very visible to enter. Now, we also consider the New York 830 or the 1:30 p.m. GMT opening price. Now, if you want to trade the market as a part-time trader, get very fast executions and then call it a day, You want to consider where there is high volatility in the market. That is where you seek to participate in the move. Now, the New York session 8:30 opening price comes with a whole lot of volatility. That is normally it comes with news releases, high impact news releases that pumps volatility into the market for you to make good use out of. Now, when we come to our lower time frame, we also apply our market maker model here in order to fine tune our setups and find high probability trades. Now, if you consider the New York 8:30 opening price here, the red flag here is our impact news. Now, when it comes, we anticipate a liquidity raid into a 4 hour discount array. That will be the 4 hour, whether the low risk by the first stage of accumulation or the second stage of ray accumulation or the ICT silver bullet. Now, when there is that liquidity rate during the New York Ethiopian price into our 4 hour discount array. Now we also look out for market structure shifts on the 15-minute chart or our lower time frame chart to confirm that we are actually reversing off the 4 hour key level. Now, after the market structure shifts, we are expecting that when the 4 hour 10 a.m. expansion candle opens, we are expecting that there will be a liquidity rate to the 15-minute chart market maker buy model stages. So after the market shifted structure to the upside, there was a key level here. In this case, it can be an internal range liquidity or order block. That's the low of the 4 hour 10 a.m. candle will fall. Now we are not interested in capturing the low of the 4 hour 10 a.m. or 2 p.m. GMT expansion candle. We are not interested in that. What we are interested in is trading the body of that candle. So when you come here after the liquidity rate into the 15 minutes internal range liquidity, we are expecting that if indeed price is bullish, that particular internal range liquidity should be respected to propel price upward. Now, when this happens, there is a key level that is formed within this section, this side, where price will retrace back to form our first stage of accumulation. Now, this is where we seek to enter our positions and target our 2RR. So here, mostly I consider high probability order blocks. Now, these high probability order blocks are uh, candles that is in a bullish scenario. That will be a down close candle that took part in a liquidity raid or raided liquidity itself. Now that was what I'll consider. And then when price closes above that particular down close candle, I'll use it as my entry to target my 2RR towards the 4 hour external range liquidity. So basically, this is everything that I consider in this trading strategy. Like I said, it is not new. I've already discussed the entire trading strategy. This is a section of it that I use mostly as a part-time trader because I have few hours at work to get onto the charts and perform my analysis and then execute. So I concentrate more on the New York session and then get my trade and then I am done for the day. Now you must also remember that in all these price movements, we should also look out for SMT with correlated assets. Now we'll hop onto the charts and then look at some setups. Now this setup that I took within the week. And then when you go to the 4 hour chart, you can see that price was coming from a daily order block. There was a liquidity sweep into a daily order block. And then you can see that the bodies of all these candles respected the 4 hour internal range liquidity. Now, at this point, this read occurred during the New York 830 opening price. So I dropped down to my 15-minute chart to look for my entry. And as discussed, this is the New York 830 opening price. It's rated liquidity to the downside. So on the 15-minute chart, what I was expecting was a market structure shift, which I had at this point. And then this market structure shift also came with a displacement or fair value gap. So I waited patiently for the 2 p.m. GMT or the 4 hour 10 a.m. Expansion candle to open. And as you can see, this is the low of the 4 hour 10 a.m. New York time expansion candle. So when it formed here, it took part in the formation of this 15 minutes internal range liquidity. And then I waited for price to test this 15 minute internal range liquidity. So as you can see here, this down close candle tested the 15 minute internal range liquidity. So when this formed, all that I was waiting for was price to close above this down close candle for me to use it as a high probability order block to enter my trade and then target my 2 hour. And as I wait patiently, that occurred. And this is where I found my setup. Price closed above it, and I placed my entry here, targeting a 2 hour. So as you can see, the price came to this point. This was my entry. This was my entry, and I targeted somewhere here for a 2 hour. So as you can see, price tested and then expanded quickly towards my target. It was a very beautiful setup. Now, this setup, what actually happened was that I took partials and moved my stop loss to break even. So I didn't get the entire move as I expected. I didn't get the entire move as I expected because when a price started dropping lower, it came back to my, what do you call it, my stop loss, since I had already moved it to break even. But I was able to secure some partials, and that's the essence of trading. Always, you must apply your risk management strategy to ensure that you secure most of your profits out of the market than you being stopped out. So as you can see, the next day price went straight to the target 32 RR. Now, I am not just cherry picking these setups. Actually want you to understand that I took this particular trade, and the proof is on my Discord channel where I called it out. So this was where price came to the daily order block, and then our 4 hour internal range liquidity was respected with an SMT with silver. And then this is where the setup occurred. So as you can see, I posted this on my Discord channel, and then price moved very quickly. So as you see, I stated here almost there, and then price took. So this is where I also made mention of me moving my stop loss to break even to secure some profits, and then the next day the target was reached beautifully. As a beginner trader, I will never advise you to quit your primary source of income to focus only on forex trading, because that will have a negative impact on your trading psychology. Now, this that is where you find most people over leveraging, reaching for insane risk to reward ratios just to become millionaires overnight. Sorry, it won't work. Why risk it if you can trade alongside with your work with this simple strategy? If you stayed with me throughout this video, it shows how determined you are to profit from the Forex market as a part-time trader. And I believe with discipline, patience, and perseverance, you are going to make it. The channel still remains AK Trace, and if you like this content being shared here, kindly like and subscribe to aid in the growth of this channel. Good luck and stay safe.